following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I'm John Logan. This is Global Market Pulse, and we're looking at a Thursday night here in the Philippines. Thursday morning for you guys. Got a little bit of action this morning, especially on the S&Ps. Here's the 10-year. We're going to take a look at this first. And guys, officially, this is the September contract, and on the remnants of the June contract, we have officially turned south here. And right now, I know you guys are like, well, thanks for telling me now. We needed to look at this 126.04 area on the September contract as kind of the Maginot Line for this particular situation. Here's the daily situation. We looked at the weekly. Now we're officially below profiles, and we cannot really go long down here right now. That's the way we're looking at this. And, you know, if you've been watching this show, I haven't been a huge fan of going short. We've had a pretty good pullback here. This was the 240s lately. So right now, to get back in the game on the long side, I would just prefer to see this thing get back above 126.04 to even start nibbling on this. And then we're still going to have to get past a hurdle around 127.11. Somebody's saying, who's Bill Gross? I mean, the guy's traditionally been wrong. Yeah. And if you look at his track record over the past couple of years, it's not been the stellar situation. He's been pretty much betting against bonds going up and notes going up for the last couple of years. You know, I mean, I personally, if you've been watching this show, I personally don't feel like the notes and bonds are really, I mean, we've just come off all-time low rates practically. And this type of pullback, if you look at the grand scheme of things over the past historicals, thank you. We're not in a massive pullback situation yet, but it really clearly states, now here's the daily, here's the weekly, clearly states that it's kind of okay to be short and not okay to be long here, as we like to call it, black and white, block out one side of the marketplace. So what do you do with the notes and bonds now? I'd prefer to see some more information. We've had a good move down. Everybody's talking about higher rates now, which is kind of, could be considered a contra piece of information. So just keep your eye on it. I don't think, you're really in a situation where we can just continue to lever short bonds and notes. So right now, I'd keep my eye on this particular little scene right here. I'd take a look at the future side. I'd take a look at the 30-year and the 10-year. Just look at the sells here. We're obviously right across the board. Close to right across the board. Very similar situation on the 30-year. And I would just wait patiently until we had some new indications of new profiles attempting to appear to either get leverage points on the short side or be able to kind of pick up new demand areas. What does that all mean to me? This is one of those situations where we just got to sit tight, just kind of wait and see what happens. The euro, though, we're going to pull that up. We're going to just kind of hit the things that are on the news screens right now, things that are in play as a trader. You kind of want to keep your sense about you, but also try to take advantage of things that are in play today, this week, what have you. Let's take a look at the euro currency here. And we talked about patiently wait until we could possibly pick about around the 112.25 area. Got stopped out of that trade. And as we closed above on the daily, we came back and retested that area. This is one of those powerful situations. I'm not a big fan of going long the euro, by the way. If you've been watching this show, you know. We came back and hit 112.30. So we basically pulled back within 5 ticks after that close above a profile, went back and retested. Now, what do you do with the euro? This is kind of my thoughts on the euro. I think we've got a lot of good short-term economic news out there. We're in the middle of the first week of a profile here on our long term, and the unfair high on that is around 114.67. So we kind of got close to it last time, pulled off. I'm looking at that as another battle point on the short side. Wait patiently, hoping we can get up to that 114.67 level after we got stopped out after the 112. Let's pull up that number there, 112.25. Remember, the theme always is lose a little, lose a little, lose a little, make a lot. And if you've been kind of paying attention to some of the trades we've been doing lately, it was just a really sweet situation to sit on the sidelines and wait after we got past that 111 area last and got up to that 114.5, 115 area. Had a really good pullback on this, and we may have a similar situation, reaching some targets above. That's going to be Custer's last stance for a while for the shorts, though. If we start breaking above there, you got some long-term technical damage that you're going to have to start dealing with. Take a look at the Aussie dollar. This is something that's been kind of near and dear to my heart. Talked about that, that fundamental kind of blip on the screen. Pretty big short squeeze, in my opinion. Thought we were going to come down. We've done that, but again, we don't have anything to hang on to. So we were talking about waiting until the 78.65 area was possibly hit. That never happened. We pulled back anyway. Short-term traders, I just don't think you have any leverage right here. So again, this is kind of a super in the middle of the balanced area right now on the weekly and the daily on the Aussie dollar, and I just think you got to sit tight on this one. Hope we get another rally up into 78.65 on the Aussie dollar. Let's take a look at the Japanese yen. This is the weakest of the week here. Again, not seemingly want to get above that 124.61 area, but again, we're kind of rattling around here in a profile just like we have historically on the end. If you go back in time, we've used these profiles to kind of gather ourselves and move higher most of the time. I still feel very, very, how should I say, continuation pattern-ish type feeling on the Japanese yen, which means I'm a big fan of buying support. That new support is 123.29 down below. And breakouts and closes above 124.61 have got to be paid attention to on the yen. Long-term situation on the yen, nothing's changed. Breakout, everything's looking rosy. Would love to see this thing, as Tom would say, build some K's up here and find some support, find some new leverage points to move this thing a little bit higher. Conversely, let's take a look at the dollar. Now, we talked about this was a situation we had to just kind of sit tight on 96.38. Broke that, came back and retested. I'm actually not a big fan of shorting the dollar right now, so this is kind of a wait and see on the dollar. Try to pick a battle at 96.38. Again, that's what stops are for. And as we look across the board here, I'm going to reference the Canadian dollar. Now, this is really, in my opinion, showing its hand pretty well. This is similar to the Japanese yen. You're trying to find support, on this thing, 123.68. We found it yesterday. That's where you're going to orient stops down below. This is a really cool situation considering the dollar's pulling back and the U.S. dollar's pulling back. The Canadian dollar is still showing that relative devaluation, higher move in the Canadian dollar, U.S. dollar cross. Okay. The blue line is present. Point of control is worth. Okay. We're going to cover that in a second, John. We're going to cover that after the first break here. I'm going to just cover some of the usual suspects on no POC there. And let me get rid of some of these chat messages here. Excuse me, guys. I'm still suffering a little bit here. Let's go into the S&Ps really quick. And what we're going to do here is just kind of go back to our indices heat map grid. We're on our daily ranking system. And as we look at the S&Ps, we've talked about the warning signs of trying to go along the S&Ps on this above profiles on the weekly and daily. Thank God for the breadth here. It's just kept me from looking at any type of long situations and trying to look for short situations. Here's the breadth charts. We can blow those up so you guys can take a look at it. But this is basically showing a disconnect on the intermediate, and the weeklies actually may start rolling over here, which is very, very interesting. for the S&Ps. Now, as we've been talking about that disconnect and the breadth, that if you watch this show a lot, you know I'm talking about. as you watch this show, you've heard me talk about that disconnect and the leaders of the pack that are driving the index and the rest of the pack, which is showing a massive disconnect in this index. It's kept me from going long and looked conversely to go short when there's some opportunities possibly based on that breadth and those disconnects in the internals of the S&P. So 2117, nice little mark yesterday, and I feel fully if we get below 2100, 2099 rounded off, you could hear a pretty big whoosh sound in the S&Ps finally. That breadth is continuing to stay negative, and that's keeping me out of the long side for sure. Whew. All right, let's take a look at a couple other things on the usual suspect radar screen here. We took a look at the notes. The Shanghai, man, I mean, good Lord, you guys weren't around during the day when this thing was going on today. Just insane volatility. Take a look at this. Came back, no new profile, had to buy that. Breadth was still positive at 44.15. That's what these inflection points are for. But as this thing had moved up, you know, there's really no reasons to try to go short this thing. There were some points to be made on the short side, but as we look at this, I mean, these are incredible moves intraday. Look at this. So what do you do with this now? You don't short it. That's the first thing you don't do. Excuse me. But again, we could start seeing some new highs in the Shanghai, and a lot of people are ultimately going to get caught on the wrong side of this. But guess what? I mean, you know, when we start seeing some cracks in the armor here, looking at Shanghai, looking at that's going to be the time to start really looking at this as an opportunity finally on the short side. But right now, you just don't have any warning signs, so to speak. And, you know, that's just amazing the volatility of this thing. Let's go into the August gold contract. Nothing new here. I'm just, you know, we now have, this is our long-term daily situation. If I can get my charts to pop up. All right. Got a little problem with these signal guys. Okay, here we go. You know, 1187. That's the weekly anchor lows. When we come back, we're going to talk about going a little bit more. You guys hang around. Excuse me.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
It's hard to believe that it's been almost 2 years since Andy Hecht started his newsletter, the Technomental Commodity Report. In that time, he's delivered many winning trades for his subscribers. To commemorate Andy's 100th weekly issue of his newsletter, we're rolling back the monthly price to the introductory rate of only $59. This is a one-of-a-kind special that is only around until Thursday of this week, which is the day of his 100th issue. By taking advantage of this 100th issue special, you can lock in Andy's original introductory rate for as long as you remain a subscriber. That's an incredible 25% savings every month off the retail price. Andy delivers in-depth analysis of the commodity market every Thursday in each issue of the Technomental Commodity Report, while providing specific trading recommendations on ETFs and option positions within the commodity market. Don't miss out on this special, as there are only hours remaining. Sign up for the Technomental Commodity Report right now at the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're taking a look at gold. Just want you guys to notice the scanner here. Again, got it right at the bottom of our weekly here. Got red across the board on gold, sitting, in the vicinity. The way this flags the word bottom is it's within a 10% area relative to the height of the box. So if you're, take the height of the box, do the math, and if we're in a 10% above or below, it kind of signifies and lets you know we're near that particular inflection point. So there we go. Again, the 240s are kind of peeling back here a little bit. So, but we've got red, weekly, daily 240. Let's take a look at gold here again. Not the rosiest situation. Gold's kind of floating as we speak. Real time, 1177. Not the time to go long gold. This is not on sale. We need to get back above 1187 to start trying to, nibble on the gold side, on the long side. That's just the way we're looking at it on the daily, as you can see. Not a longish looking situation on gold. All right, let's move real quickly. We've got some things to cover after this next break, short break here, or short segment. Let's take a look at soybeans, the November beans. This is the one that's probably the most actively traded contract out there, even though it's not the front month contract. So, we had that kind of come back and retest. We talked about this 913 area on the daily. We're kind of hanging around above there. I'm not so sure this is going to be long-lived. So remember, we start getting closes below 913 and a half. I think we could start probably looking at soybeans from the short side again. And again, you've got that maximum resistance at 940 way up there. But right now, we're kind of, in my opinion, you got a chance on an intermediate scale, remembering that the weekly, if you just kind of step back and just kind of, remember that we are pretty ugly down here. You want to understand that the long-term trend is down. You got a intermediate situation here on beans now where you pretty much on the long-term trade you're still pretty good to go, but on the intermediate side, I let these kind of next phase down profiles on the time frame adjacent to it, to the right, if you will, to kind of regulate the trade. And right now, we talked about this yesterday. You got to be out of beans right now. Save a few points. I'm not supposed to save money, I don't think. Save a few points and wait to at least get back down to the balanced area. So right now, beans, again, I've talked about no trades a couple of times already. This is, in my opinion, a little bit of a no trade. We got to take a look at oil. We got to cover all the usual suspects really quick before we get into some temperatures of the marketplace here. This is, again, here's the July crude. You got 62.28 up top, 56.92 down below. This calls 57. Right in the middle of a fair auction. No leverage here. Similar situation on the daily. Again, shorter term inflection points 60, 50, and 57.40. To me, I think crude is just kind of non-directional up here. What do you do with it right now? I'm a little bit more biased towards the long side than the short side, but there's nothing to really hang on to at this stage on crude oil to give you some leverage on the trade. So right now it's kind of a no trade. And I think you've got some areas down below, namely 57.40 down into 57 as an accumulation buy point. Okay, I think we've got a caller. David from Panama City. David, are you there?
Yes, John. Good morning. How you doing?
Good, good. How are you?
Doing great. Just want to check on your opinion on looking at price line. Where do you think it'll be very short term, like next 2 days? I got 1,200 calls.
Okay. Okay. I'm listening to you. Is that Panama City, Florida, or Panama City, Panama?
Florida.
Okay. Good. Nice town.
Oh, yeah.
Here we go. Price line. All right. So, let me kind of drill into the weekly really quick here. We're 1160, 61. You kind of found those support areas in the long term, and 1220, 1221 up top. Next couple of days, I think the cool thing is you've got another profile that's kind of like, put itself in force here. If I can get my charts to pull up here, 1184 support on it. Do I think the market's going to head higher? I don't right now. That could be some problems in general for price line. If you want to hang around, we can continue to talk about this.
All right.
Okay, we're going to go to break, guys. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. David, are you still with us?
Yeah, I am.
Great. You know, the thing I want to say is I'm not exactly bullish on the broad market. I don't know where you pick these things up. I mean, maybe you could, you know, are you in it from a little bit lower than this? Because, I mean, if you caught it around 1160, 1161, that was the smart thing to do, I guess, on the profile situation.
Not quite that low.
Okay.
I mean, I got enough profit in the call, I can dump them. I just, you know, depending on BLS numbers, you know, Friday, I'm just wondering if the S&P gets legs and pushes, you know, its stronger chart pattern. I'm just thinking if it jumps on over 1200, that between, you know, 1213 to 1221.
Yeah, I mean, the only problem that I've got with the trade, I think you got some decent support here that's kind of put its stake in the ground, but I'm just a little concerned. These S&Ps, I mean, if you watch this show, you know, I talk about the breadth quite a bit. And there's a kind of a disconnect going on in the stock market in general right now. And you know, it's kind of a decent opportunity. I really personally don't like to roll the dice before these reports come out. So you got to, you know, I know you're aware of all that already, but I'm just not a big fan of going long the market right now. And I think that could have some kind of beta relevance to what's going on with Priceline. And that's just kind of in the back of my mind right now, you know.
Well, I appreciate your opinion. I watch your show. I don't have your charting system. It's quite interesting,
Thanks.
you know, as I watch it. But like your show, like your opinion. I notice you're Carolina Blue. I just want to say roll tide.
Yeah. I'm wearing a Carolina Blue shirt, but I've got some people back home who are probably sending death threats right now because, you know, I grew up with David Thompson and Tommy Burleson and those guys in the mid-'70s, at NC State. I went to NC State, and that was when Bear Bryant was doing his thing over at the down in Alabama. But Carolina, you know, they're I gotta pull for them if they're not playing State. So
there you go.
That's the way that goes. All right, David, thanks for calling in, man.
I appreciate it. I'll call back in another time, man. Have a good day.
Anytime. Great to hear from you.
All right.
Okay. All right. So yeah, that was, you know, I'm gonna kind of look at going long stocks right now with the you know, kind of a jaded attitude. We're going to go into the indices here, and I'm just, you know, I just kind of want everybody to take this in. You've got two indices on the globe right now on an intermediate basis that are breadth positive, and you know, that's something that you know, I've got to pay attention to. I mean, the Shanghai is not an anomaly. It's a serious country with a serious, you know, fever for buying stocks right now. That could end ugly. It has in the past. But as we look at these global indices on an intermediate basis, I mean, a lot of them are rolling over. There's some disconnects out there. I just don't think you have super massive opportunities on the long side based on that alone. And, you know, the rate environment, you know, you kind of step back even farther, and that rate environment is just not the immediate thing that stocks want to see. Ultimately, I think they do want to see a higher rate environment. But right now, it's, you know, this stock market has survived completely on a low rate environment, cheap money, rebuilding, all the other things that goes along with free money. And this is something that the market's going to have to kind of digest. Now, will that be reflected in tomorrow's unemployment report? Again, you're rolling the dice a little bit there, in my opinion, and that's kind of the way I'm looking at things. I'm a little bit more biased towards the short side. Therefore, that price line, you know, situation going into the announcement tomorrow, a little bit more towards the bear side on that. So I think we have Demantis from Lithuania on with us. Demantis, are you there?
Yeah, I'm here, Johnny. Hi.
Great. Good to hear from you. And I don't talk about this enough, but there's a mastermind behind the programming side of this product that we're looking at right now, and his name's Demantis. And
oh, thank you. You're flattering me as always.
Great job with this product, man. I mean, he's in. What happened today? You finally got through some of the proofing concept at your university, right?
The proofing concept, I got through all of it, and that's right. That's such a relief. Now I can fully concentrate on making beautiful stuff for you. Great.
So a lot of, you know, there's Demantis attends one of the biggest, most, you know, well-regarded
you can call it like that in Lithuania. Really technical based university.
Well, I tell you what, now you can not only work 16 hours a day, but maybe 21 hours a day since you have some more free time.
Yeah. I was hoping 25 hours a day. The day's too short for that, though.
That sounds good to me. I tell you what,
yeah. I assume.
The reason I want you to come on today, and it's just guys out there don't know this, but you're just a complete joy to work with. You get it quicker than anybody I've ever seen on the programming side, and it's just you know, you're almost kind of a mind reader. But when it comes to this product, I think some of the concepts that we've thrown at you that you know, I mean, Demantis, by the way, folks, is, you know, he kind of thought about, you know, why don't we make heat maps for this thing? Why don't we make it where people can drill down into these indices, do some filtering? There's a really cool database behind this that he's played a huge role in. And as we look at these, you know, these breadth charts, I mean, basically everything that you guys see he's been a part of. And you know, I just wanted to, you know, I want you to come on and just.
I can't take all the credit. It's your idea behind everything, but thank you.
Well, if something goes wrong, if something goes wrong, you're going to take the credit as usual, and if it goes right, I usually take the credit. That's just the way this company runs. So I mean, that's how we're going to operate for a long time.
The evil boss.
I tell you what, one of the things that you did recently, which I don't think some of the folks are really seeing how cool this is yet. I mean, we're working things out with Tommy. We're doing the testing this week, and I know I've been talking about this for a while. But this application, one of the things you've done recently, which we had talked about, was you put these, indications, if you will, that really combine with. I'm gonna take a look at Allstate Corp on the S&Ps here, ALL, and I'm gonna hit the Taz Says button. Caution to shorts, and what you did is you put a kind of a peel back indication in here that kind of lets people know that, in a quick kind of view, with looking at a kind of a heat map grid of all the stocks in the S&P 500 with the way to filter for that. I'm going to go in here and put new box appearing. As you guys can see quickly, you can see all these peel back orange or yellow situations that just give indications that it may be time to start taking a look at this from a profit-taking standpoint. And this is one of the things that I just think it's extremely cool what you've done.
I agree. That's a really useful feature. What else I like about it is the new feature. I don't know if the viewers noticed that, but the heat grid in the scanner's dashboard itself. That's like how far is the price above the profile or below it. That's really useful, and that's another thing there.
Right. Oh yeah, in the heat map itself, within the dark green, bright green, or what have you colors that are here. I tell you what, we've been using this thing on the show pretty religiously lately, and what we've been doing is trying to find things, in a market that, we talk about this all the time, you and I. This market's kind of had this disconnect based on the breadth calculations that we look at. And as this market kind of drifts a little higher and they're above weekly and daily profiles, a lot of the simplicity of trading profiles are, well, God, John, I mean, we're above profiles and I must be looking for buy opportunities. But, well, in a normal situation, yeah, I think that's generally the case. But as, Demantis has built this product and we've been able to kind of look at these breadth disconnects, we've been talking just over and over and over again that it's not the rosiest time in the world. And I'm pulling up our breadth charts right now, Demantis. It's not the rosiest time in the world to get long the S&Ps or to get, really excited about going long stocks right now, because these breadths have been really flip-flopping around, especially on the intermediate. And, we've been using this product. I'm going to call it your product. That
you can call it our product.
Thank you. Thank you for allowing me to say that. But as we look at this, and we've been drilling down into stocks that are, based on everything I just said, stocks that are just not cooperating and showing their hand early on the short side, and we've been just kind of ringing the register when it comes to finding things. I'm going to pull up our only matching results here. Finding weak stocks in a market that continues to drift higher, and good gracious, I mean, there are just hordes of weak stocks to take a look at. And I've got kind of matching results only shown here. We've been talking, religiously about, I hate to beat a dead horse, but the Whole Foods of the world, some of the other names on here, the T. Rowe Price Group, Tyson Foods is on there now, Weyerhaeuser Company. These are ones that have just been, thanks to you, some of the stars of the short world. And the good news is as you put these profiles in here, in these mouse overs, we can find out where to place stops. And how, I've kind of been talking the whole time. We got a couple of minutes left before the break. What have you been juggling on the side of the university scene? Because that's kind of a thesis you've been working on lately.
Yeah. Do you want me to go in detail on that, or just a brief?
Sure. Well, not the deep deal, but
Yeah. Okay. Well, basically, the idea behind the project I was working on was a trading platform that is oriented towards the cryptocurrencies. So I don't know if many of you are aware of those, but Bitcoin, Litecoin, and all of that stuff. So I was trying to integrate multiple cryptocurrency brokers into one platform from which you could basically just analyze the charts and perform your trades. So in a really brief explanation, that's what happened there. However, today I had to give a long explanation to the people at the university, though. But they seem to be happy about that. So I think
we didn't alert everyone, but it was actually streamed on the internet for your proof of concept, if you will, that you did. It was very, very interesting. And listen, I'm super excited about you moving. Well, we're always going to tweet this, as you know. I'm really super excited because, you get it when it comes to trading. Some guys are asking in the den, are you a trader also? I mean, I'm going to throw you in that group, and I'm ready. And super excited that you kind of get involved with some of the automated systems that we look at, and be able to put your, kind of 2 cents and brain cell power into that mousetrap too. So that's going to be a great day when you get involved with that.
Yeah, hopefully soon enough. Yeah, actually, to answer the question, if I'm a trader, I'm trying to get involved into the markets more and more. Actually, when I started working with you, John, that really gave a kick to me to really start getting interested in that stuff that I'm working on. And now I have opened an account finally with the broker. How unfortunate for me, the broker crashed a few weeks after I opened the account.
Oh my God. God.
So now I'm looking for a new broker, but I'm trying to get my head around trading as well.
Well, I'll tell you what, I'm looking forward to you visiting here. And we've got
Believe me, I'm looking forward to that too. Yeah.
For many reasons, or just for trading?
Dude, this Philippines, Asia, it's really the side of the world that I would like to visit. I've never traveled outside Europe yet, of course, but hopefully Philippines will be the first place I go.
Great. Well, I've got a good lawyer sitting right beside me in case you screw up over here while you're here. I think we might be able to.
Yeah. Thank you for your consideration.
We call him Dr. No. He always tells me every cockamamie idea I come up with over here, he basically just says no. So I tell you what, we've had a good run with this. I can't wait for the TFNN subscribers to finally. I've been talking about this for a month, rolling it out. But as you know, we're doing some final testing. Pia's kind of, putting the stamp of approval on some of the inner workings and the connections, and hopefully, I'm thinking by Monday this thing might be rolled out. And
that's really perfect news. I hope the listeners and the viewers are excited for that.
Well, I think once somebody kind of gets acclimated to this thing, I can't trade without it, and I will refuse to look at the markets without some of this information. I mean, it's and some of the automated systems that we're going to be constantly working on together. I'm just looking forward to a couple of weeks to keep you in a steady state of information between you and I when you get here, man.
Yeah, cool.
Great. Well, look, thanks for coming on today, and I think the listeners have enjoyed hearing the other side of the programming coin, and we'll pick it back up again later.
Thank you for having me. Good luck with the show.
You're welcome. All right, good man.
Bye-bye.
Thanks, guys. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartly's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show, and thank you, Demantis, for coming on today. You know, I can't say enough about the people that work for us, or with us, actually. And there's some great folks in the background that make a lot of things happen that we do. And, you know, he's just a complete joy to work with. He's the smartest guy in the room most of the time. And he's a great guy on top of being a great programmer. Let's take a look at Colgate-Palmolive. This is one. You know, again, these are the kind of the dogs of the S&P situation where maybe able to pick up some free points here. Colgate-Palmolive, you know, the Chipotle Mexican growth scene is still there. CMG, if you don't know the symbol there, Chubb Corp. I'm just going to reel off the names because we've got about 3 minutes left. Avalon Bay, Communities, Avon Products, that's an eternal short, like as in maybe you don't ever take it off. Dominion Resources. These are ones showing extreme weakness in a market that just has kind of drifted higher, but the breadth's negative, and we're trying to find relative strength trading situations. Corning, GLW, Green Mountain, you know that one. Hershey Foods Corp. I mean, this is one, I'm going to pull this one up, HSY. And these are all off the scanner, HSY. Here we go. So the breadth has kind of got you thinking. And the scanner's kind of finding the opportunities here on the individuals. So here's Hershey. Again, been a weak stock in a strong market. We're on a relative scale. It's $90 stock. Can have some volatility. Here we go. Kind of finally get some closes below the 92 area. What do you do with this now? I think it showed its hand early. I think you might have some, even though we pulled back on this thing, market help, you could have a little bit of a play here. Now, let's just look at Walmart. This is one we've been beating the table about for a while. And as we talked about it the other day, below profiles in the weekly kind of give us some great stances here. We had this orange bar up here. Then we knew that we were going to probably have a profile. And then lo and behold, new demand area. Time to sit tight, relax a little bit. We hope we get a rally, 76.50 on this thing. And then we just pile back into the shorts. But these things are just target-rich environments. When you start seeing those colors, and going back to Demantis again, when you start seeing, and I'm going to come in here, I'm going to reset the sorting here, and I'm going to go into our daily sort, and I'm going to say new box. All right, so that means new profile attempting to appear. And as you can see, there's some stocks on the radar screen here that are maybe switching gears. Agilent Technologies, Autodesk, ADT Corp, Baxter International. Quite a few things to rip off here when I'm talking, but Fluor Systems, I mean, let's look at Fluor Systems. This has been one we've been talking about for a while, FLIR. And let's just see where we're at with this thing, FLIR. Here we go. And I hopefully won't have a cold next week. All right, so we have the orange bar. We started seeing that indication yesterday. This has been one that we've been, this is an ugly situation. Below profiles in the daily and the weekly. Got the new box attempting to appear. Probably going to see that today. So any shorts that were on, excuse me, got a little mosquito here. We're going to have to take that with a grain of salt. Now that we may have reached some targets down here. There's some better shorts out there than this one right now. We're going to take a look at one more on the hot list here, the round situation. And I don't see any. I hear the music, guys. We're going to have to pick it back up again tomorrow. Demantis, thanks again for coming on, and thank you, David from Panama City. That was an interesting price line call puzzle we ran into a while ago. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.